KK Mistry also joins us. He represents India's biggest mortgage company, which is HDFC Limited. Mr. Mistry, good morning. Thank you for joining us. Well, the strength in rupee, Mr. Mistry, is also coming at a cost, and the cost this time is the fact that interest rates in the system are unlikely to go down and they could go up in the short term.
Very realistically, it was unlikely that we would see interest rates going down or a rate cut happening in July. Very frankly, once the rupee's instability came in the last 3 weeks, the expectation of a rate cut in July, I think, was more or less over. So I don't think we expected rates to go down. Now, this is a short-term measure in my view, because the whole objective is obviously to arrest the volatility, to arrest the weakness that we have seen in the rupee. I would expect the rupee to appreciate by probably 50 to 100 paisa today when it opens. I don't know how the markets have opened. But this is a short-term measure. Now, I don't see RBI increasing interest rates. I don't see RBI increasing CRR in the July policy. But hopefully, if the monsoons continue to remain good, if inflation really starts looking lower, RBI could at some point of time in the latter part of the year relook at rates, because they have to look at growth again.
KK, in particular for you at HDFC, how does this move impact your cost of funds?
See, I said these are short-term measures. Now, we don't go and borrow money every single day in the market. So I don't see it having any significant impact in borrowing costs. When borrowing costs move up 10-15 basis points or move down 10-15 basis points in the course of a week or 10 days. So I don't see that to have too much of a difference. I mean, if you're saying that, is it something that will lead to increase in lending rates? No. Would it lead to change in spread? I don't think so.
KK, so you're making an important point here, and your assessment is that the interest rates in the system, because of last evening's RBI measure, are unlikely to go up. Now, that's a different thought, because most of the brokerages or most of the brokerage...
Let me correct that. What I said is that RBI is unlikely to increase rates or increase the CRR. Yes, short-term rates, of course, in the market will go up. Call rates will go higher, short-term rates will go higher. I don't see it having an impact on long-term rates. You could see the yield curve, which could become a little inverted for a short while. So we have to wait and see how long RBI keeps this measure of tight liquidity. But the objective clearly is to arrest the volatility in the rupee. Because if the rupee kept weakening, then the possibility of a rate cut was slowly over time diminishing. So it was important that at least in the short term, RBI brings the rupee under some control. And if there is any speculative element that is going into creating this volatility, then that speculative element is quickly removed.
KK, exactly 2 weeks ago, Government and Reserve Bank of India, when rupee had weakened, they'd argued that the weakness in rupee has got nothing to do with internal factors. It's all about what is happening to the dollar index and other emerging market currencies. So if emerging market currencies collapse further, and if the dollar index, if appreciates further, rupee automatically will come under pressure. So then what should Reserve Bank of India do then? Because rupee is also linked to external factors.
The rupee volatility has been because of two reasons. The initial part of the rupee volatility was because of Bernanke's statement, the fact that dollars strengthened across all currencies. We saw that happening. But subsequently, the sharpness with which the rupee fell a couple of weeks ago, in the last week, if I recall right, of June, the sharpness with which it fell when it fell from 59 levels to 61 levels, I think that is what created that element of speculation in the market. So it was important that speculation gets sort of removed.
KK, do you get a sense that perhaps this may not be it, and the RBI may have some more arms with them by way of, by which they would want to control the currency even further?
In the medium term, in the short term, I don't think so. If the rupee volatility does not sort of ease off after this, then I think RBI will have to look at, some curbs on import of luxury items or something of that sort. It's more a government policy than an RBI policy, but something along those lines could be the next thing they could look at. But what this will do is it will tighten short-term money supply. Yes, short-term rates will, of course, go higher. As rates go higher, the cost of borrowing money in rupees and, remitting it out or speculating in the rupee becomes that much thinner. And that is what RBI is trying to do.
So do you see this impacting asset quality of the banking system at large?
No, I don't think so. I really don't think so. I don't think this is a measure which will continue for the next 6 months. I think this is a short-term measure. Difficult to define what short-term is. But I think once RBI sees some stability in the rupee, they may go back and look at removing some of these restrictions, because this will have an impact on growth. So GDP growth numbers will get impacted if the interest rates, if the short-term rates at least remain high.